Hello, everyone. Good afternoon. Hope everyone's still up. Otherwise, go get another coffee. We're going to have a stimulating 45 minutes of discussion around the next stage of asset development. We've got actually a pretty damn impressive group up here. I'm not talking about myself. Talking about Arthur Hayes, Chase Lockmiller, and Miguel Villas. Do you know each one of these gentlemen were former derivative traders in their own right in various asset classes. And some, like Chase, have actually traded nearly every asset class on the HFT side. So we're talking about traditional banks as well as companies like GetGo and Jump Trading. So we've got a stellar cast here. And I myself have a background in derivative structuring. So I spent my time on the foreign exchange and interest rate side. So let's kick off, and I'm not going to do full-blown intros for the gentlemen here, but you probably know a number of them anyway in their institutions. They can talk about their institutions, but we've got to my right here, Miguel Villas, who is actually a former colleague of mine from CME Group, but he is now the head of XRP markets at Ripple. So he'll be talking about XRP and Ripple. Chase, next to Miguel, is the head of trade execution and general manager, partner at Polychain, and he'll be talking about what he's up to. And then we've got Arthur Hayes at the end there, who is the CEO of BitMEX, based out of Hong Kong, and we'll be talking a bit about perspectives from a crypto exchange perspective. Great. All right, well, let's kick off. I'm going to start with Arthur. And Arthur, you have been offering derivative products for a while. And in your experience, I'd like you to talk a little bit about how Bitcoin derivative trades and how that might be a bit different than the traditional markets.
Sure. So Bitcoin derivatives is dominated by retail traders up until hopefully in a few weeks CME launches their product, which basically means you have people who have a technical understanding of Bitcoin and other cryptocurrencies, but usually don't have a financial services background. However, they would like to go long and short on Bitcoin and a number of other cryptocurrencies. So basically what that means is you have a lot of retail punters who have no idea what they're trading, and the derivatives are extremely mispriced from even just basic cash and carry theoretical pricing. So for anyone with a traditional financial services background who comes into the crypto derivatives space, they quickly notice that they can essentially make money extremely easily by applying very basic strategies like selling a futures contract and buying spot and rolling it every 3 months. Like that's a 40% per annum trade right there with very little mental difficulty in doing it. And you can do other sorts of strategies as well. So that's probably the biggest characteristic of this market is that it's extremely retail driven. And for people from traditional financial backgrounds, they find it a great place to make money.
Great, thanks, Arthur. I'm going to turn this to Miguel, talk a little bit about XRP. Can you give us a sense of, Ripple's long-term view for XRP, and just give us a sense of where XRP markets are now?
Sure. So for the folks in the room who don't know about Ripple, Ripple's a fintech blockchain company based in San Francisco, whose number one goal is to make international payments frictionless. So enabling something we call the Internet of Value, moving money the same way information moves today. A big part of that is XRP. It's a digital currency that we think is the best for international value transfer. So, this morning there are a lot of panels today about Bitcoin and some of the struggles that it has around moving value because of the transactions per second limitations, the cost. These are things that XRP does really, really well. And so the goal is always being that bridge between fiat and fiat, and its throughput, its cost, and its stability sort of allow it to do that. So in terms of goals for XRP, it's to continue what we've been doing. A few weeks ago, we announced we had our first pilot of a payment processor using XRP in a payment. There's more of that to come. So the goal continues to be sort of embedding it in payments, growing that liquidity to sort of roll up the ladder, if you will, of payment sizes and payment companies who can use it.
And what are your thoughts on XRP derivatives? Do you need derivative products?
Look, I think the whole space is going to need derivatives, right? As Arthur was mentioning, there are a lot of dislocations in the space, so there's opportunities when derivatives come to bear, but then there's also the necessity to hedge, right? I've had a lot of conversations today around the fact that really, if you're long these assets, there's no way to hedge. One of the, I think, the real blockers to institutional adoption, especially for banks, is the ability to be able to hedge something forward. So whether that's with a futures contract, or whether, and I know we'll get into this a little bit later, or an OTC derivative, it's absolutely necessary.
Great. So Chase, would you mind talking a little bit about Polychain and sort of what motivated you to go from HFT trading in US equities, for example, to Polychain and crypto trading?
Sure. So for those of you that don't know, Polychain is a hedge fund. We manage a little over $400 million exclusively in digital assets. So what I mean by that is assets that are built on top of the blockchain. I spent about 10 years prior to working at Polychain working in more traditional, trading more traditional financial products in an algorithmic and quantitative fashion. And to me, what was sort of the tipping point between going from having a successful career there to going after this entirely new market was that I felt like the traditional electronic markets were they had kind of gone through this period of explosive growth during the 2000s and during the financial crisis, and they had kind of tapered to the point where it was a classic S-curve where the early days it was sort of people figuring things out, doing the pit to screen trade. It was a little clunky, and then there was this period of exponential growth where people started making a lot of money, and things were being done electronically. But over time, those markets became incredibly efficient and really, really difficult to compete in. And sort of when you reach this plateau within that S-curve, all that's really left to solve are sort of the most difficult problems, sort of the highest hanging fruit that no one had really gotten to. So being able to gain a competitive edge was rather challenging. And I felt like looking at the crypto markets, it was more sort of at the bottom of this S-curve, where it was sort of at this inflection point where we were about to see this moment of exponential growth. And that really got me excited about joining.
This reminds me of a friend of mine who's an FX trader in London, and he has now been looking at the crypto space and just shocked by the spreads and the arbitrage opportunities. And some of you traders will be familiar with the term. You can drive a truck through it. So there's still money-making opportunities in the crypto space, which is definitely starting to attract some of the more institutional hedge fund type trading counterparts. Makes sense. Yeah. Okay, well, this is a question for all of you. Let's talk about the Bitcoin futures that are imminent to be launched by both CME Group and CBOE. Want to get your thoughts on the advent of this?
We're looking at you, Arthur.
If you read my newsletter, you've probably seen me talk about this ad nauseum. But at BitBEX, we are extremely excited for the CME and CBOE contracts up until now. Essentially, if you wanted to trade with us and some of our competitors, you need to have Bitcoin as collateral, and your P&L is based in Bitcoin as well. So if I'm an institutional investor and I don't want to touch Bitcoin, but I want to profit off of the volatility, I'm really in rock in a hard place. I don't know how to custody Bitcoin. I can't get myself comfortable with that, so I can't trade these products. And now with the CME, I can just post dollars and I can start trading. It all sounds Weinfeld in theory, but when you actually look at the specs of this contract, it doesn't really fit the Bitcoin market. It's closed for 2 days on the weekend. It has a 20% limit up and limit down over a 24-hour period, and the underlying exchanges are prone to having technical issues, and nefarious actors love DDoSing exchanges when there are lots of money to be made from price settlement issues. So I think it's a great contract. I think there's going to be lots of cannon fodder for Bloomberg, Reuters, and Wall Street Journal to write about how the CME fucked it up, or maybe they did well. But at the end of the day, I can't wait for it to happen.
Yeah.
good. Yeah, I think.
Yeah, you follow that. Go ahead.
I definitely echo a number of Arthur's sentiments with being very excited about this contract coming online. I think it's an important step for the space to have products like this in creation to help make the markets more efficient. Now, like Arthur, I have a number of sort of objections to the way the first version 1 is being done, but I'm happy that it is being done, and people are going to make mistakes, and those mistakes are going to be realized and corrected for over time. And I think overall it's a great thing for the space.
Yeah, no, I agree. I mean, I think you have to really give the CME a lot of credit for taking the risk. And for those of you who don't know, Sandra had a lot to do with that contract while she was at CME, so you can give her a small round of applause.
That's great. Now I'm going to get blamed for it.
Yeah, so if it's a disaster, you can blame Sandra. No, I'm joking. Look, I am fascinated by, so this is the first sort of big derivative that's going to be out there for the space. It's futures are one price point in the future, which is really good for hedging simple risk, very similar to the gold market. And Sandra and I used to work together on gold contracts. Because it's not complicated, a future works really, really well for hedging. I do wonder, as the space evolves, as people start to get forward risk, if a future is going to be enough, right? And if we really we need more bespoke solutions a la the FX markets, OTC swaps, repos, forward contracts. I do wonder if that's where we eventually end up going, but this is definitely a great first shot.
It's like you just teed up the next question, Miguel. So I want to actually talk a little bit more about risks, because as a derivative is good as a hedging instrument in some cases, there are risks when you've got derivative instruments that either don't completely match the exposure that you're trying to hedge, and or products that may introduce leverage, have liquidity issues. So I'd like to get each of your thoughts as traders who have managed a lot of these risks, price gapping, all that good stuff. Sort of what your thoughts on what safeguards could be, should be in the market, whether they're regulatory driven or whether they're market driven.
I mean, I think at the end of the day, you have to be able to continuously trade 24/7. The second you stop some sort of trading is when you have gap risk, and that is obviously the most vicious of risks in Bitcoin. Depending if there's a group of traders who know that they can force someone to be liquidated in massive size, and there's a discontinuous price jump, then they're going to do it. And it's a 24/7 market with people from all over the world who have different varying levels of regulatory compliance with their domestic regulator, and to the extent where they can trade in maybe some would say malicious fashion or just being traders, they're going to do it and they're going to try to make money. So thinking about that and sort of proofing yourself for that is probably the #1 risk, I'd say.
I think there are a number of risks just with like the implementation of different derivative products. So, for instance, with the SIBO, this futures contract is being settled based on the closing auction price on the 3rd Friday of the month for the Gemini auction. Now, if those of you who don't know, the Gemini is an exchange that trades Bitcoin and Ethereum, but that auction isn't a super liquid event. So it's sort of a very easy to potentially manipulate moment of price discovery that a nefarious actor could potentially manipulate. There's another point I was going to make, but I forgot. Why don't you go?
Okay, yeah. I'll jump in. Look, I think liquidity solves a lot of risks, right? And when you don't have liquidity, that's when you have real problems, right? And that's what really gap risk is. It's just a momentary lack of liquidity. I do think from a regulatory perspective, I've spoken to some of our old clients at CME who have said, look, I'm looking forward to participating. I just need this to be a little bit more clear. I need things to be a little bit more on the up and up so that I can have faith that I can act as a good actor and not get done over by bad actors, right? When we start to get regulatory clarity and some of the folks who have been playing in traditional financial markets for a long time feel comfortable stepping in, that raises liquidity significantly. And then that starts to diminish some of these risks that we have today. So I think as the space matures and grows, And really, we're not getting away from regulations, and on from a certain perspective, we should really embrace it, because there's never been, a multinational, multi-trillion-dollar market without it. But until we get that, and we get some of the more traditional guys comfortable, I think you're always going to have these risks.
Okay, so I want to give you some stats here in case you're not familiar with the foreign exchange markets, just because it's the largest market out there. So according to the Bank of International Settlements, they do a triennial study, survey every 3 years, and this one came out in April 2016. $5.1 trillion US trades every day in the foreign exchange markets. 1.7 trillion is the spot market, we call the cash market. That has actually declined for the first time since they started recording in 2001. 2.4 trillion is FX swaps, which categorizes derivatives. And the balance, basically, of the 5.1 trillion is derivatives. So what do you conclude from that? Well, the derivatives market is bigger than the underlying spot market. And just so you know, here's another tidbit. The US dollar leg represents about 89% of all trades. So if you ever questioned if US dollar was the reserve currency, just take a look at those statistics. And the reason why I'm telling you this is because if crypto goes down the path of traditional markets, we do have to ask the question, as the derivative markets get larger and larger, do they take shape as they are today? And what I would like to ask the gentleman here is, there are some big gaps in the crypto market right now. You just had a panel on custody of crypto assets. There are other gaps in the market, and I know Chase in particular had some views around that. So maybe we start with Chase about what do you see as infrastructure gaps and maybe some other gaps that need to fill in if we're going to go down this path.
Sure. So I think the space itself has primarily evolved as sort of a grassroots movement. And all of these protocols being developed inherently open source and peer-to-peer, it has naturally sort of created this market that's created products and services that are targeted towards the retail investor. As Arthur alluded to earlier, I mean, a lot of the order flow that you see on exchanges like BitMEX is driven by retail investors. I think that's positive, and it's gotten us to where we are today, but it's not the same level of product and service that traditional institutional investors are used to sort of having in more traditional asset classes. So to me, I think there's a huge opportunity for different services, whether that's on the data provision side or whether it's on the qualified custodian side. Polychain, having surpassed 150 million in assets under management, we are in the process of registering with the SEC as a registered investment advisor. Now, one of the things that you have to do as a registered investment advisor is find a custodian for your assets. And to date, there was a panel before us that was just talking about qualified custodianship, but most of those products, they only serve Bitcoin and Ethereum, and there's very few that will extend beyond that. And I think there's a big opportunity for the asset class is growing, the number of tokens being offered is growing. I think there's a big opportunity for other players to sort of get involved in the space.
I get really excited when, so at Ripple, we're very enterprise focused, right? So the goal is to get payment providers and banks to eventually use XRP as that bridge between fiat and fiat, as I was mentioning. And what that starts to bring, I mean, and Chase is dead right, the initial ecosystem is all retail. But as Sandra was mentioning, when you look at FX markets, one of the reasons they're so big is that you have speculation from retail and professional institutions. You have liquidity providers, like what Chase used to do. But then you also have real hedgers, right? You have people who actually need this liquidity for something. And if you don't have that, you really do limit the size of the market, regardless of the tools and the actors, if you don't have those hedgers, right? So I get super excited when I start to see the enterprise-focused folks start to come in and saying, yep, I am a challenger payment provider, I'm an established payment provider, I'm a bank. How do I use these assets? How do I use XRP in particular to move money When you start to get folks like that, and sometimes, interestingly, some of the use cases they don't require actually holding the asset for a very long time. So you're watching folks jump into the space even before you get things like insurance and custody, which clearly I think everybody in the room today has probably heard about it ad nauseum, how badly the space needs insurance or custody. But there are actors who are willing to jump in now and maybe jump in, hold it for a little bit, move it to one place, and then get out, which is exciting.
Yeah, I mean, I think the biggest thing that I'm hearing from more hedge funds and those type of traders is they want some sort of prime broker for Bitcoin and other digital currencies. So they want to deposit their fiat currency of choice, and their PB gives them Bitcoin, Ether, what have you currency, and they'll use that for whatever trading they're going to do. So I think that there's a big opportunity for some sort of large financial institutions to step in and provide that product, and they can really charge an aggressive amount of fees for providing that.
Yeah. I think the aggressive fees. Selfishly, I like to not charge aggressive fees.
Let's tone down the aggressive fees.
Yeah, easy on that. But I will say, the custodians I've seen in practice, they have been very aggressive fees, and I think more competition will eventually drive down those prices. But beyond custodianship, there's algorithmic execution. That's very limited offerings out there, and the space just needs to develop to cater to traditional institutional investors.
Yeah. I mean, look, I think Arthur's point on PBs is super important. When you're a hedge fund, you inevitably have 2 or 3 PBs. All of your positions are held at those PBs. They're marked at the end of the day. It's easy to calculate your NAV. It's all very simple. Now, if you have this thing sitting over here, which who knows what mark do you use at what time? You don't have any margin relief. It's expensive to trade. All of these things say, well, yeah, I mean, the returns might be great, but just from an operational perspective, I can't make this work for me, right? So I think we are second inning of all of this, and these tools will develop. But until we get things like that, we are going to be in a little bit of a holding pattern.
I think quickly, I think it will. I think it will actually. It'll be interesting to see how the space evolves, especially with Ethereum implementing proof of stake, if that ever comes online, how the custodian would handle potentially staking your Ethereum and sort of validating transactions. And tokens that are on a proof of stake mechanism, it just becomes this whole other potentially yielding asset that a custodian could potentially be a huge value add provider as well.
So Chase, and all of you guys, actually, you've made some excellent points. And one thing I want to emphasize here is people talk about the need for more products and more products. Absolutely, there are a need for derivative products and hedging products. However, if you don't have the underlying infrastructure and operational infrastructure to actually secure, move the things around in an easy, cost-effective way, then it's going to be pretty difficult to have mainstream trading when participants in this, as well as having regulatory and other safeguards. One thing I want to talk about, which I think Chase alluded to, which is crypto is unique for a number of different reasons. I think a lot of people in the room may agree that it's a new asset class that has certain attributes. The question I'd like to pose to the panel here is really around the models that we have today to trade, execute, settle, clear, confirm. We have a lot of intermediaries that do these things. And the current models have a lot of centralized parties who are trusted bodies to accomplish this. It seems to me, at least now, we are going down that road of replicating a lot of what's going on in traditional institutional space. But let's talk about decentralized exchanges, decentralized paradigms. What are your thoughts on that for the crypto asset space?
I mean, a lot of people will ask me about do you think decentralized exchanges are going to take off? I think for the majority of retail traders, they don't care about centralization or decentralization. They want to get in and out, they want to pay a low fee, and they want high liquidity. So if I have high liquidity exchange over here that's centralized and low liquidity exchange over here that's decentralized, the retail trader is always going to choose a centralized solution. So unless And when I see a lot of the decentralized teams focusing on the wrong things, yeah, it's really nice math, and there's no single point of failure and distributed yada yada yada, but it doesn't really matter because at the end of the day, the end client doesn't care about any of that. They just say, okay, well, this exchange trades 100,000 Bitcoin a day, this one trades 5, so where am I going to trade? I mean, and I think if they focused on creating something very usable for retail traders that is decentralized and bringing that liquidity, then yeah, I absolutely agree that it would be a smash hit.
I think I disagree with that a little bit. And the part I disagree with is the whether or not people care whether or not it's decentralized. And I think the issue that's driving that is the fact that the way centralized exchanges currently work is it's kind of bundling two services. The centralized exchanges are sort of acting as retail custodians as well as transfer of value. So the issue is that being that custodian for the retail assets, they sort of become these honeypots with this huge store of private keys. And traditionally, they've been the major points of failure in the system. You look back at the Mt. Gox hack and Bitfinex and on, and they're just present these massive honeypots for hackers trying to attack the space. Now, some of the decentralized exchanges, I think, are very exciting protocols, but you can have sort of a lot of the benefits of centralization built on top of decentralized exchanges and removing that custodian aspect. So, for example, a project that I'm very excited about is the 0x protocol with something like Paradex built on top of the 0x protocol, where it sort of acts like a centralized exchange in the relayer, and you sort of get rid of this race condition with publishing orders to the blockchain, but it still removes the aspect of any given exchange having to sort of take custody of the assets, which I think is a huge win for the overall system and the robustness against potential attacks.
Yeah, the interesting thing about the decentralized versus, and I always look at this, I think, look, liquidity trumps all. And at the end of the day, if you have a wonderful decentralized exchange and there's one contract trading, even if you wanted to trade on there, you wouldn't be able to, so it doesn't really matter. And when liquidity pools, it's very hard to get people off of large liquidity pools. I mean, we struggled with this a million times.
Liquidity is king.
Liquidity is king, right? But Chase brings up a wonderful point. These are not just liquidity pools. They're also where you store your assets if they are in crypto. Now, I don't necessarily know, though, that you need a decentralized exchange or a decentralized storage solution. You just need a secure storage solution, maybe for yourself. The beauty of these assets is that you can easily move them, right? So I don't keep any of my assets on exchanges, right? And
right, but it's funny that that's the default trading protocol. Like, get your crypto on Polo, trade it, and then get your crypto off as quickly as you can. Right. That shouldn't be the mechanism.
Yeah, and look, and maybe there's a more elegant solution with the existing system, right? I mean, again, there is no insurance in this system. There's no insurance in this space. And look, it's a little different. It's not like if I lose my crypto, it's not like somebody can print more and give it to me later. Like, it's gone, right? Yeah. So somebody's got to give you some sort of equal value. It does get interesting. But I think you'll end up with some mixture of traditional solutions, possibly with decentralized solutions, but liquidity will trump it all.
It does until it doesn't, right? I mean, with Mt. Gox, it's like the definition of a negative externality, right? It's like everybody was flocking to Mt. Gox because that's where the liquidity was. But then when it got hacked, Bitcoin as a whole went down, 90% or whatever it was.
Sure. I mean, I think
that affected the space.
I think if Mt. Gox had reopened after a week after losing on the money, and they said, okay, here you go, you can start trading again, they'd still be alive. So from what I've seen, the crypto traders have very short memories. If you will present another shiny tool that has lots of liquidity and you can make some money and it goes up 100% every day or down 100%, or goes 50%, they'll trade it. They want the volatility and the liquidity, and they'll haircut their assets as long as they can get that trade, get the fix.
Yeah, but maybe that was back when Mt. Gox was around. I think today, when you're talking about a different caliber of trader and institutional, they don't have short memories.
People,
So I think this was, I was about to make that same point, Miguel, which is this trading, this evolution is now going up a notch. And if you're an institutional trader, you're not going to tolerate, certain things that maybe a retail person might tolerate. So the question now is, most people I know who've been trading in the space individually, they have accounts in multiple locations because they don't want to have concentration of risk in any one exchange, or they actively don't keep their assets or crypto on the exchange. But these cannot be long-term solutions, right? We've got to find solutions for this. And I think this is where you're saying there's opportunities in the market.
Sure. Oh, without a doubt. And I think enterprising, intelligent folks with some capital and a willingness to take some risk, I think there's a ton of opportunity. What there isn't, unfortunately, is regulatory clarity, right?
Any regulators in the room?
So I was in Asia for 2 weeks, Hong Kong, Singapore, Tokyo, Korea, a little bit of a fact-finding mission for XRP. And one of the refreshing things is in a lot of those locations, you have at least one regulator who has said, look, this is what we think. Good, bad, or indifferent, this is the way we're going to regulate it. In the States, we have a real challenge, right? You have the SEC, the CFTC, the OCC, I mean, you name it. Then you have all the state regulators. It's very difficult. So when things are gray, people do not put capital at risk because you don't know how things are going to end up. Right? So we need a little bit more black and white, I think, before some of these opportunities can get taken advantage of.
Well, even though there's not a lot of regulatory clarity yet around the crypto asset space, Chase, I was wondering if you could talk a little bit about what you're seeing from an investor standpoint. You must be getting inquiries, or at least a stepped up number of inquiries from institutional players.
From the regulators? Or?
No, institutional players, like who want to invest in crypto, who haven't invested before.
Right. So the question is what they're...
Sort of, what are you seeing? Are there any trends that you're seeing? Are there more institutional interests?
Right. Got it.
The types?
So I think institutions that we've spoken to have, it's been sort of a long conversation, and I think as Bitcoin becomes more mainstream and crypto assets become more mainstream, I think you're seeing a lot more interest in people getting comfortable with the idea of allocating some percentage of their portfolio to this new asset class. And examples like what Chris Burniske was showing earlier today with showing that Bitcoin has pretty much a zero correlation to any other asset class. That's such a unique thing to be able to get access to these days. There's very, very few things that you can invest in that have near zero correlation with anything else in your portfolio. And just that alone is something that independent of the huge bull market we've seen and independent of the exorbitant returns we've seen, I think that alone is a very, very compelling argument for institutions to want to invest in the space.
Look, it has been a whirlwind of a year for the space broadly, for XRP in particular. Some of the phone calls that I field these days, my head does a little bit of a double take in terms of the caliber of people who are starting to look to invest in the space. It is really, really exciting. Some of the largest asset managers, hedge funds, putting together really interesting index products, wanting to invest in their own portfolios. Obviously, questions of security and custody always come up, but the desire is there. The zero correlation is a big, big deal. Obviously, the high returns are a big, big deal. But I'm really, really focused on XRP, so that's how I get exposure to the interest for folks out there. But in XRP, the institutional demand has been really impressive.
I guess,
the trend that I'm seeing the most is ex-traders and bankers who basically quit their jobs and start trading crypto full-time, or they have a variety of exchanges up on one of their monitors at work, and they're trading Bitcoin at work while they're supposed to be making markets on some other.
I hope they're not at JP Morgan, man. What? So I hope they're not at JP Morgan.
I think because obviously institutions have it takes a longer time. Takes months of due diligence on the exchanges and all these issues that we've said. But from a PA basis, a lot of people who say, okay, well, this is amazing. I can use my skills that I've learned over X number of years in the bank or hedge fund or what have you, and I can log on to a slew of exchanges. I can do arbitrage. I have some sort of derivative products. It's like kids in candy store, and they're very excited. And that's where I see a lot of growth is who beggars to say, fuck it, I'm just going to trade crypto now.
Yep.
Okay, so I'm going to move on. So there are probably some people in the audience who are interested either to trade crypto on their own, PA, or to potentially start a crypto fund, or perhaps they have a fund and they may want to incorporate some crypto into their portfolio. What would you guys recommend for people who are really sort of beginning to look at this? Do you have any suggestions or advice around looking at XRP, Bitcoin, the major crypto?
Yeah, I think time horizon is really important. If you're looking at sort of a longer term horizon for being in the space, I think a few things to always remember. Number one, these are not pieces of paper. They are not bales of hay. They are not barrels of oil. This is all technology. If you don't really understand the technology, then you don't know what you're trading. So how in the world do you have an opinion as to whether or not it's useful, whether it's worth anything? So I think do your tech homework as much as you can. I think it's really, really important. And then the other thing that I always tell folks is look at if you do understand the tech, then what is the tech being used for? Does the use case make sense, right? So one of the reasons I joined Ripple is the XRP use case made a ton of sense to me and the tech was sound, at least as far as I could understand it. So for me, it was simple. Like utility will drive value eventually to this because there's a company behind it that's pushing a particular use case and it makes sense. If you can't find that with a token or an asset or a currency, then you really have to think hard about putting your hard-earned money into it, right? It is very volatile. Volatility does not do good things to people's minds. If anyone has traded a very volatile asset, you know that when it's dropping fast, your ability to make a good choice it goes out the window. You don't want to do that with your mortgage. So understand what you're getting into really at a deep level before you decide to commit any capital. And if you're going to commit capital, make sure that if it happened to walk away one day and you didn't have it, you'd be fine.
Yeah, definitely not investing more than you're willing to lose. It is, like you said, an extremely volatile asset class. But I definitely echo your sentiment about doing your digital homework. This is, people that are maybe tech savvy. This is like a whole new extension upon that because prior to the blockchain existing, this is the first time we've ever been able to have very unique digital assets. That did not exist before. And so, prior, you have a music file, you could copy that from one part of your hard drive, copy it to another part of your hard drive. With crypto assets, they're actually unique objects that you're, holding onto. And so, I think getting a little skin in the game, buying a couple Bitcoins, sending them to your friend, I think that's just a unique exercise to really get you to understand the details of how these systems work, and I think that's an important first step. So.
Yeah, I think when I see people who are starting new funds, I think the biggest question is what is your strategy and how is that defensible? If you think that you can just, I get a lot of people coming and say, I'm going to start a crypto fund. Okay, what are you going to do? I'm going to just take $10,000 from somebody and go buy some Bitcoin and charge them 2%. Okay, buddy, you won't be around in a year because that strategy is not going to scale. And then you have, on the other hand, you said, okay, I have some sort of algorithm, or I'm going to basically invest time building tech and connecting to exchanges and doing all sorts of other strategies. I think of something that actually is defendable in a few years. This is essentially a perfectly competitive market. Anyone can start their own fund with a website and saying, hey, you can get access to this strategy or crypto. So the traditional gates that you have in the traditional financial world don't exist. So the ability for you to have a half-assed strategy and be able to attract capital will not last very long here.
Yeah.
All right then. This is not investment advice, so I'm making a disclaimer now. But I would like to ask the panel if they have a few tokens or crypto assets that we talk a lot about Bitcoin and Ether, of course, and XRP, but are there a couple that have some really interesting tech behind them that perhaps people in the audience, if they're interested, could do some research on? Is there any interesting crypto that you've seen lately that have some interesting tech behind it or interesting use case?
Yeah, so I mean, definitely one of the projects that I'm most excited about, in full disclosure, Polychain is an investor and an advisor to this project, is Filecoin. So Filecoin is a very interesting application of the blockchain because it's truly a, it's like creating a digital commodity, right? Different than Bitcoin, which is sort of a store of value. With Filecoin, you're basically buying tokens that you can use to actually do something. You can use them to store files on a distributed network. And a number of people have sort of created different cloud storage solutions, whether it's Microsoft Azure, or Google Drive, or Dropbox, or AWS. But all of those file storage operations, they're highly commoditized, right? Storing a file in one place versus another, it's just storing it on a hard drive somewhere. So to me, this is like an incredibly clever innovation in the space that has the potential to disrupt a number of large centralized players, not only through the quality and speed and access that they'll be able to provide through the IPFS file system, but also with regards to the cost, and this being a major cost savings for a lot of large institutional or enterprise players that are storing a lot of files on the internet. For Twitter stores all of their tweets somewhere, Netflix stores all of their movies somewhere. If they can save substantially on those costs, it's a huge huge benefit to their overall economic model. So it's one we're excited about.
I don't really. I mean, if you've read the newsletter, I call a lot of things shit coins, so I don't really love or hate any coin other than its volatility and ability to make me some money. But
Arthur, you're really good at pointing out the bad ones.
There's a lot of bad ones.
Yeah,
There are a lot.
and I was going to say, like, I do not envy, Polychain, blockchain capital, to have to kind of dig through the thousands of not really great coins out there. Quite frankly, some of the scams, and obviously those are easy to kind of wipe away when you know what you're looking for. But it's kind of a shame because it does make it harder to figure out, what is actual quality out there, because there's a ton of innovation happening in the space, really, really amazing, great stuff. And, at some point I just said, look, I can't even pay attention to this anymore because I don't have the time or the energy to dig through and find out what's good and what's not. I mean, it's not my job anyway, but I do hope that at some point we start getting a culling of the herd a little bit, and that you continue to see, as has happened, over the last few years, where you see a few of the really quality projects kind of rise to the top. I'm personally, I really enjoy following Zuko on Twitter, and I think Zcash is really, really interesting. But I could never own anything but XRP. So.
Yeah. Low-key, you're most excited about XRP.
Okay.
Just a little bit. Well, hey, if we're going to talk about a coin that has actual traction and has a company behind it that's well funded and is really sort of starting to get that escape velocity, good luck finding something better than XRP.
Yeah. Always be closing.
All right, we'll leave it at that.
ABC.
Always
Okay, we only have a minute left, so we want to round this out with, of course, 2017 has been a phenomenal year. I really would question any single person who's been in the crypto space in this room or anywhere else to say that they would have predicted what has happened this year in its entirety. I mean, it has been a significant ride, wild ride. So, 2018, some thoughts? What do you think? I mean, obviously, if things are on track, we'll have derivative instruments like the futures. But is there anything in particular that you're looking out for? I'm not asking you to make a Bitcoin prediction, but is there anything that you see as a trend or something that you're looking for in 2018?
Hard forks. I think it's going to be the new way to generate a large user base for your new coin. People just start doing airdrops off of the Bitcoin network, and the fact that these things have non-zero values for some pretty questionable technology means that people are going to keep doing it.
Yeah, I think you'll end up seeing a large investment bank providing liquidity in a lot of the good coins. So I'm pretty sure about that.
I think the big story of 2018 is going to be regulation. I think the regulators have been looking at this. They've been asking questions about it all through this, ICO boom and fundraising that we've seen over the last year. But I think 2018 is going to be the year that the regulators start taking action and start regulating.
Great. Well, thanks, everyone. And on one final note, I will say, because this is global, we're going to start hearing from countries you may have never really heard of or really thought of trading in this space, because I'm beginning to see that now, and it's pretty phenomenal. So thank you, and have a great afternoon.